In this video, I will share with you 7 scalping secrets to fast payouts with futures prop firms. Number 1, counter trend reversals are great for scalping. You will hear many people tell you, oh, do not counter trend because the trend is your friend until the very end. Now that may be true if you are a swing trader trading the daily chart, but for us who are scalpers, we're scalping the next 15, 30 seconds, 1 to 2 minutes. That's what we do. And we don't need to go with the trend if we're doing that. Now it helps if you know the overall trend of the day. However, we mainly take counter trend reversals, meaning we buy the dip and sell the rip for a quick profit. I can tell you that some of my best trades are 15 to 30 seconds long. Instant down candle, as you can see. This morning around market open, I bought this dip. Immediately there's a good 20 points to sell as profit. My normal size for 300k accounts at Apex is 4 contracts. Sometimes I do 2 contracts, but mainly it's about 4 contracts. If you get 20 points on that and you sell it on the way up, that's a good $1,500 to $2,000 at the market open for 1 account. Number 2, scalp for only 10 to 20 points on NQ. There's no need to hold for 50 or 100 points as you see other people post on X or on YouTube. If you hold for 50 to 100 points, you're no longer scalping, you're a trend trader. For me, my channel is called Future Scalpers because it works for me. I scalp for 10, 15, 20, 25 points or so, and I'm happy with that. Why? Because NQ moves up and down, as you can see, you never know what's gonna happen. It's easy to look at this chart right now and say, oh, easy, I'll just buy here and hold for the up right here for a good 100 points. But hindsight trading is so easy, anyone can do it. But if you look at the real life market right now, is it gonna go up or is it gonna go down? You may think that it's gonna hold this and go up, but it can also dump like this right here. And that is why we only hold for 10 to 20 points, because we're trading the momentary imbalance, meaning these are rubber band trades. If something comes down hard, it's likely to bounce at least momentarily so that we can capitalize on that reversal momentum. The good thing about this is that we are not micro scalping. A lot of futures prop firms don't like people scalping for 4 or 8 ticks, which is about 1 to 2 points in NQ. We don't do that. We scalp for about 10, 20, or even 30 NQ points. And this, according to futures prop firms, they actually like it because you're locking in your profits and you're not just holding and hoping. So if you're scalping, when is the best time to do that? Which brings us to number 3, scalping the opening candle for 10-15 points. On the first minute candle, usually will give you a win if you literally just buy the dip, sell the rip, or sell the rip and cover on the dip. As you can see this morning, 9:30, there's a good 20 to 25 points to be had if you simply buy the dip and sell the rip. And I certainly played this morning market open. All I did was buying the dip and selling the rips on 2 contracts, and I put hundreds and hundreds of dollars on each of my funded accounts. And that brings us to number 4, do not ever copy trade your accounts. And I know there are big YouTubers out there, big gurus telling you, I copy traded 20 of my accounts and look, I made 20 grand because each account made $1,000. Good for them. But for most people, you will not be able to do it, especially if you're a beginner. It is very hard to do both strategy-wise and also mentally, because when you know that you have 20 accounts on the line, it's much harder to execute at the right time. Trading is as much psychology as it is with risk management and strategy. And copy trading only works when you're in the green. Of course, it's easy when you're up $500, $1,000 on 20 accounts. But guess what? No one has 100% win rate. Everybody loses. In fact, some of the most seasoned and veteran traders, they'll tell you to have a win rate of about 60 to 65% max. Anyone who tells you they have a strategy of over 70, 80% for the long run, they're probably not telling you the truth. And so if you know that is the case, then you do not want to copy trade your accounts. In fact, you want to do number 5, which is trade your funded accounts one by one so you can spread the risk. Now, when you spread the risk this way, you can actually have some accounts with a win rate of 80% or more. And the reason that I can have higher win rates on some account is because I'm rotating and spreading the risk on multiple accounts. As you can see, some of these accounts, they're taking red losses. However, you'll see that some accounts have absolutely no red days. How is that possible that I can have a 100% win rate on some of these accounts? Didn't you just say that you can't have more than 60 or 70% win rate? That's true. And that is if you trade only one account. However, if you're spreading your risk on multiple different accounts, PA1 may be red, PA2 may be red, but PA5 can have consecutive wins because PA5 is taking the best entries and having the best trades. And so in this video, you will see me execute this PA strategy and show you how I go about quote-unquote dollar cost averaging across multiple accounts and using this PA strategy with entries and exits commentary. Now, you're gonna see me enter a trade here that is gonna be going long, because when you see a chart like this rip creeping up, a lot of shorts are squeezed. So in the past, I would just like to keep shorting, and I get blown out. What I've learned is I gotta go with the momentum. And so as you can see, I'm gonna play it right now. I'm gonna be getting long. I have a bid right here, and instantly my ATM strategy is triggered as I shown you in the video, and it's a 10-point NQ stop. Now, if I get stopped out here, I'm gonna hover my mouse on here to get ready for the next account to go in and take the trade. Now, it's holding my level. I like it, but I do not adjust these levels unless I think that they cannot be reached. I would like to engage in a long, and now I move it. So now if this stops me out on break even, I've locked in profits on this account, and I'm going to use another account to go ahead and take the trade again. I would like to see this break the highs because on squeezes like this, usually it continues. But if it doesn't, it's probably going to come a little lower. And even if it keeps coming lower, you still have bounces you can buy because overall the trend is up. Now, if there's a market structure shift, huge displacement down here like this, then it's a different story. Then you may want to look at pops. I'm out on this because I got stopped out. You see, I'm going to buy again because I got some profits here. I'm not going to use another account. My mentality is, hey, I have $375 in profit. If it washes again, I'm going to go ahead and buy it. And if I get stopped out, I already have some profits to cover that loss. Okay, you see, now I have the second account ready. I have my bid right on there because if this takes a loss, I'm going to have some minor loss plus the profits that I had previously. So now I'm about to engage in the second dollar cost averaging on the account. As you can see right here, I clicked it because I knew this was going to be stopped out. No problem. $400 right here on 4 contracts. And again, I'm going to go ahead and use this account again if I get stopped out. It's a rotating of your different accounts. That's why it is important for you to not only have 1 or 2 PAs. It's important for you to have 5 PAs at the least, I would think. And that's why you're going to buy hundreds and hundreds of these evals. This is why this strategy works. You can see I manually sold on the push. That was a sizable bounce, locking in my gains. And that is why when you see profit, you take the profit. I see that it stalled a little bit. And so I want to manually click the sell as, which is the blue line. The green line, I adjust it to the liquidity draw. Usually it pushes up, draws them out, and then comes back down. Right now, as you can see, I've broken even. I put my stop, broke even. So I am going to be green on this trade no matter what. See right here, I enter it again because I think this thing's actually going to bounce. Usually it's a retest. It squeezes up, retest. If it holds this low here, it's going to go up. As you can see, it didn't stop me out on the break even, but I have now another trade put on this account. Now I move my stop loss a little bit lower because I only have 1 contract. So my mentality is if I lose about 5 points of this is no problem. It's only $100. I still think it's going to go up. And that's why I'm buying this on the long, but you never know. This can dump straight down. That's why when I get about 10 to 15 points in NQ, I take it. You see now it's looking good as it's popping. I sold 1 on ask. I clicked the sell ask button because sometimes it may not reach. Right here, you see I lost $1,000. And this account before I was down 400, but because I re-entered, now I'm actually back green. So I made $1,000 here.